Hello traders, Doc here. Today I'm going to talk about the RSI indicator. RSI, or Relative Strength Index, is the most popular indicator. RSI can help us determine the trend, time entries, and it was developed to measure the speed and change of price movements. Basically, readings of 30 or lower indicates oversold market conditions and an increase in the possibility of price strengthening or going up. Readings of 70 or higher indicate overbought conditions and an increase of the possibility of price weakening or going down. So this is an example of an RSI indicator, and on the right side there is a scale from 0 to 100. Here I marked 70 and 30. These are default numbers, and everything above 70 represent overbought state and everything below 30 represent oversold state. So let's simplify the things. When price is in an overbought area, we look to sell, and when price is in oversold area, we look to buy. This is very simple indicator, and it is the most used indicator within Forex beginners. It gives an overall indication how to use indicators, so that's why beginners use it the most. When I started with the trading, this was my first indicator, and I used it for a while, but then I stopped. As I learned more about the Forex, I didn't really feel the need to use this indicator anymore. But it helped me in the beginning to understand how to use indicators overall. Here on this scale, right, you can change numbers to 80 or 20, but the most used are 70 and 30. So the one way to use the RSI is to sell when the price is in this overbought area and to buy when the price is in this oversold area. The question is this really useful? Well, it is not really a great idea to trade just based on RSI signals. You will need more information, and I will show that in examples. On this example here, we can see that RSI gave us right signals. Here it gave us signal to sell and price went down. Here it gave us signal to buy and price went up. And then again here to sell, and then again here to buy. So in this example, RSI worked perfectly, but that will not be a case every time, and you should know that. So let's see one example of an RSI signal here. This time we had uptrend, and the price formed this beautiful evening star candlestick pattern, and also we can see that the RSI was in this overbought area above 70. So after price formed this beautiful evening star plus this indicator, okay, here overbought state, it was a good opportunity to sell, and as you can see here, it would have been a good decision. So in this example, we have overbought RSI and we have this beautiful evening star candlestick formation. Here we have very interesting formation. This time price was in the oversold area, but we had this very strong bearish candlestick pattern, so it was not very good decision to buy, okay? But here, just a few candles later, it was a better opportunity because price was again in this oversold area, but formed this strong bullish candlestick followed with this massive bullish candlestick. And it was a little bit better opportunity, but as you can see here, price went up, but not much. It then went down again and reached this previous low. I'm showing you this example to let you know that price will not go up every single time after you see RSI in this oversold area. This time we did get a bullish move, but it was not very strong bullish move, okay? RSI was in this oversold area, giving us signal to buy, and price even formed a few strong bullish candlesticks, but failed to push up. As you can see, we have very strong downtrend here. So it was not very smart decision to buy just because RSI was in its oversold area. I want to show this example for you to understand that this will not work every time, and that you should find more reasons to enter a trade, not just RSI indicator. This is one very good example how you can combine this indicator with other tools. Here we have this beautiful example how to use RSI with the other tools. We have this beautiful support zone. Price failed to break this zone multiple times, here, 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 and here. Then went up and then down again to test this zone again and form this very strong bullish candlestick. Basically, it formed morning star candlestick pattern. But also what we have here is this RSI showing us that price will probably go up because it reached this oversold area. So price reached this area, we had support zone, we have this beautiful morning star candlestick pattern. What happened next? Price went up. And this is the best way to use this indicator, to combine it with the other tools. When I say other tools, I mean support and resistance zones, Fibonacci, and candlestick patterns. There is another way to use RSI indicator. Basically, what you look for are divergences. What is divergence? Basically, divergence occurs when the price highs and lows are not related with indicators highs and lows. For example, here price showed us higher lows, but the RSI indicator showed us lower lows. And when we have this unrelated structure, we have divergence. Here we have bullish, and here we have bearish divergences. I recommend you to stop the video and write this somewhere because it's very useful. And when you look at this few times, you will remember it, no problems, trust me. So for example, this is a regular bullish divergence. Price formed higher lows, but the RSI indicator formed lower lows. And what we expect to happen is price to go up. And this is what happened here. Or for example, we have this hidden bearish divergence where price formed higher highs, but the RSI formed lower highs. What we expect to happen next is price to go down, and this is exactly what happened here. Let's show some examples on the charts. Here we have example of a bearish hidden divergence. So RSI formed these lower highs, okay, but price formed these higher highs. It was indication that price will go down, and as you can see here, price formed this bearish candlestick pattern, followed with this huge and massive bearish candlesticks. And what happened next? You can see that price went all the way down. So this time this bearish divergence gave us a very good signal to sell. This is another example of a bearish hidden divergence. Price formed these higher highs, but RSI formed these lower highs. We can see here two massive bearish candles plus this divergence. That was a good indication that price will go down, and as you can see here, price did go down. Here we have example of a bullish hidden divergence. We can see here that price formed these lower lows. This was one low and lower low, but RSI formed these higher lows. We can see that every low is higher than the previous. That's why we call this higher lows. And what happened next? Price went up. It was not very strong bullish move, but it was enough to catch some pips. I mentioned before that RSI will not work every time, so also RSI divergence will not work every time. But it is very useful, and from my experience I can say that RSI divergence can be very useful if used correctly. There's another way to use RSI indicator. It is when RSI crosses this 50 line. This was a good opportunity to sell here, and you can close the trade when price goes down and reaches this oversold area. So in this example, this was our entry level and this was our close level. So RSI gave us a good sign to sell and to close, so this was a profitable trade. But I don't recommend you to use these tactics because it is very inconsistent. From my experience, it is not good because you can just look here and here. So what would you do in this scenario? It is extremely annoying and basically impossible to trade. You cannot just buy here and then sell here and then buy here again and then sell here again. It's just mess, complete mess. So I don't recommend you to use this way to trade RSI. First, let's see advantages of RSI. It is a very effective way to predict potential trends, and also RSI can give a very good signal when to enter and when to close position. But there are some disadvantages of this indicator. For example, true reversal signals are rare and can be difficult to separate from false alarms. I showed you some examples when we had overbought or oversold, but price continued to go up or down, so it was a fake sign. Also, RSI can stay a long time in this overbought or oversold zone. As you can see here, price is in this overbought zone for a very long time. So if you sold here or here or here, it would have been a mistake. And it is very hard to find a good entry when RSI indicator is in this overbought area for a long time, or when RSI indicator is in this oversold area for a long time. For example, here we can see price enter this oversold area, basically here. So we expect reversal here, but it's not happening. As you can see, price went down all the way here and price is still in this oversold zone. But here you can also see an example of a support zone combined with this beautiful and very strong bullish candlestick, and also RSI. Here we didn't have many reasons to enter a trade, but this time we had this support zone and very strong bullish candlestick. Also RSI is in this oversold area and crossing this 30 line. So it was a good indication that price will finally reverse and go up. And as you can see here, this is exactly what happened. Price went up and formed this huge bullish move. So I want you to remember to never trade just because of indicator information. In this case, just based on the RSI information. It is good to have one or two indicators included in your trading strategy, but never rely just on indicators. You need more information, just as I showed you here in this previous example. You need support, you need resistance, you need candlestick patterns, maybe Fibonacci, moving averages, whatever you feel good about. I want you to know that there is no magic indicator that will give perfect buy or sell signals. I hope this video was helpful to you. Please like it if you enjoyed it and subscribe to my channel. For more content, you can visit my Instagram account or my Telegram group. Thank you very much for watching and see you next time. Bye bye.